Polygon Matic is starting to show signs of a possible correction or crash to the downside over the next couple days, and in today's video we're going to cover exactly what that might look like and how you can prepare for it. So let's not waste any more time at all, and let's get straight into today's video. So in the last video we talked about the fact that Polygon Matic was approaching the 618 to 786 zone, or otherwise known as the golden Fibonacci pocket. Now I told you all that we needed to be very cautious at this given point because we are extremely likely to get rejected off of this level every time that we approach it, and until we are capable of breaking above it, we need to understand that there is a massive threat of some type of capitulation back to the downside. We talked about that back here. Of course, whenever we saw this rejection, we did see the price of Matic fall substantially 43% before eventually recovering and starting to retest it again. And so of course, whenever you see a point of rejection of this nature, well, of course, obviously we need to be very aware of it. Not only is it the 618 to 786 zone to the bottom side, but we can also see that there have been multiple establishments of support around this zone, which also just kind of tell us, yeah, we're probably going to see a lot of resistance here and we need to break it to see any type of continuation to the upside. Now, what we're seeing is not just that though. If we zoom in a little bit, we can see that that correction could very well be on the way. What I'm watching and paying the most amount of attention to today, so make sure you're watching closely today, is how we see the handling of this possible formation of a head and shoulders pattern. What you can see is that we have put in what one could call a left shoulder, then the higher high for the head, and are looking now to figure out where this next high is going to go. And if we put in a high and start to roll to the downside anywhere below $1.29, we are then in position to set in this right shoulder, which is typically speaking a bearish pattern. Now, not only is it generally bearish, it is also at the very top of a strong move to the upside, which makes it even more bearish, and it is forming directly at that 618 to 786 level, which makes it even more bearish. And so because of that, if we do start to see this head and shoulders pattern play out, we could be in a substantial position to see a pull to the downside within the next couple of days, maybe even this week. So what I'm watching out for again is, do we put in the high above our previous head? Do we break $1.27 and completely negate or kind of invalidate this possible head and shoulders pattern, or are we going to really start to roll back to the downside and put in this lower macro load around some of these levels here? So the way that I'm going to go about this and the way that you can prepare for it is actually going to be to establish a range. Very simply, your range to the top side is $1.27. If we're capable of breaking $1.27, I do believe a long trade is a decent idea. We've invalidated a major bearish pattern, the bulls stepped in, and we've entered into that golden pocket. And so because of that, generally we will see some type of more continued growth to the top side, maybe even towards $1.35, maybe even towards $1.40. But if we do break to the bottom side here and we do come back down to lose $1.17, do expect a further capitulation to the downside, and I do believe that some decent short trades wouldn't be a terrible idea. Now, if you're looking for a place to do your short trades, you guys know we are running a campaign with Prime XBT. You can get up to $7,000 in bonuses, 7% cash back on all your deposits, reduced fees, and access to a whole bunch of different features like copy trading if you do use the link that is down in the description below. So make sure you go check it out, sign up, deposit some money. They are VPN friendly. You can use a VPN and withdraw money, deposit money, trade, transact, anything you need to do. So make sure that you do go check that out with the link in the description down below. But in terms of where I would be going if we did lose $1.17, I would start to expect a pull towards this $1.12 to $1.07 level rather quickly. Now, there's a couple reasons why I believe this is the level that we would interact with. First and foremost, we need to take a look at where our breakdown target for this head and shoulders pattern would be. In terms of a head and shoulders pattern breakout, that puts us at the bottom of our range, right around $1.07, which lines up perfectly with these prior points of support. Not only that though, if we do look at the daily Bollinger Bands, remember the Bollinger Bands are a super useful tool. What you can see is that does put us right into an interaction with this 20 simple moving average, currently sitting at $1.11. If we also go back to the 4-hour charts here, turn off that Bollinger Band, one thing you can see is that our micro Fibonacci level at 618 to 786 bucks also sits right around that $1.11 to $1.13 area. And so as you can tell, there is loads of support between $1.07 to $1.11, and in my opinion, that is likely where the price comes back down to, looking like a current correction in price of around 9 to about 12% to the bottom side. Now, obviously, in a situation in which we do lose $1.07, we are in a huge, a huge moment where this thing could really start to capitulate back to around $1 to possibly even test these lower 90-cent levels levels here, down here, right? Of course, because that is macro support. But obviously, we're not going to play this thing too far ahead. This might not even play out. We did have a head and shoulders pattern play out right here, but we didn't lose support. We held this neckline here, and then we bounced to the top side. So I'm not going to say that this absolutely has to play out, but it is becoming more and more and more likely, and so we need to become more and more aware of it. So make sure you, again, set your range. $1.27 to the top side. If that thing breaks, boom, I'm going long on a trade. Gonna go very, very, very minor trade. I'm not going to use a lot of leverage. I'm not going to do anything like that because it is risky after a move of this nature, but there is a strong likelihood of some type of extension back up towards $1.35, maybe to $1.40. And remember, I am doing this trading currently over on Prime XBT. Now, if we do lose $1.17 to the bottom side, I'm opening up a short trade with a stop loss set around $1.19 just in case, and I am expecting some type of 8 to 10% correction towards $1.07 to $1.11 to retest this range back down here. This should be a rather easy trade depending on what side of this range we break out of, so make sure you do turn on your alerts, and I will keep you guys as super up to date as this does play out. We are in crash warning territory right now because if this plays out, we come back down here and lose $1.06. Yeah, Matic could be looking at losses of 30 to 35% if we do come back down to retest, say, some of these 90 to 95 cent levels, you know, somewhere around here. And so I would be paying very close attention to the price and monitoring your trades very closely, especially if you're on leverage, because a liquidation likely is coming very soon, and I want you all to be prepared for that. So that's about it for today's very quick update. You guys know I like to just update you as soon as I start to notice anything playing out. And of course, if you guys do appreciate that, all I ask is that you like this video down below. Now, also, if you want more technical analysis on Matic, do go subscribe to the free newsletter that I do offer every Monday and every Friday, and you can get even more updates on it as it does play out. But I hope you guys did enjoy, and I will see you all next time. Peace.